should have an invitation to come up on stage.
And I think there is going to be a screen share today. It sounded like Tokemak team was going to do a demo at one point. Whenever you all are ready for that, just share the screen sharing link in the stage chat channel right above the stage. There's a channel devoted to the chat. Some people will also ask questions in there and chat with us as we go, but we can put the link in there for the screen share.
What link would that be?
Yeah, so if you want us to provide it, yeah, I think Willie's trying to get Tyler from our ops team, and he'll probably start a Zoom, and then you guys can join that Zoom, and he'll give you a screen share permission.
Okay, that will work.
Definitely recommended to everyone in the audience. If you do join the Zoom link, do no audio. That's the easiest thing to do.
There's the lo-fi beats. Thank you. All right, welcome everybody. We will get started here in just a couple minutes for the Tokemak ShapeShift AMA.
If we have Tyler is available for that screen share, Willie.
Yeah, I'm just gonna make a Zoom.
I'll do that. Cool.
Just posted a link to the Zoom in the stage chat.
Awesome. Well, I think we're probably about good. People will kind of keep streaming in here as we go, but I think we can go ahead and get started. First, just want to thank you for taking time out of their day. I know you all have been super busy, everything that's been going on, to come chat with us. You know, Willie and I have been chatting with some of you about a potential collab between the ShapeShift DAO and Tokemak, and just think what you are doing is super cool. So why don't we just take a minute for you all to give a quick, 10 or 15 second intro, and then we'll let you guys dive into just giving an overview of what Tokemak is, and if you want to go through a demo or anything through the screen share, we can go over any of that for the first, 15, 20 minutes, whatever you guys want to go over.
Sure, sounds great, and appreciate the intro here. Excited to be talking to the ShapeShift community. This is Carson, also known as Liquidity Wizard, founder at Tokemak. We'll be, of course, showing you a bit about the platform, but in a nutshell, what we've built here and continue to roll out more features is a decentralized market maker or decentralized liquidity provider. You can kind of think of it as Tokemak is to jump trading or to Citadel as Uniswap or ShapeShift is to Coinbase. So basically a decentralized version where we've pulled apart the capital, we've pulled apart the direction of where the liquidity is needed. That's what our Toka holders stake and tell us where the liquidity needs to flow. And then the pricers, which set the bids and offers into the market. And we'll, I'm sure, deep dive into all of that during this call, and probably some exciting things that we'll be adding on later on as well.
And I'm Craig. I lead the kind of relationships and product teams here at Tokemak, although we're a very flat organization. And been speaking with your side for a little while and excited to introduce Tokemak to this broader community and hopefully set the stage of a lot of great things to come.
Awesome. CJ or Paul, you want to give a quick intro?
Sure, really briefly. CJ, I'll be working with Craig to onboard all the fabulous DAOs across DeFi and crypto to get them set up with Tokemak's liquidity infrastructure utility.
And I'm Paul, doing most of the culture for Tokemak, like the brand and the site and NFT and merch programs.
Awesome. Well, thanks all for joining. Yeah, well, you guys want to just jump into giving more of a kind of deep dive into what Tokemak is, how it works, and maybe even just go a little into this core reactor event that just happened that I know just finished up, I think, last week. That was super exciting, and yeah, love for the community to learn more.
Yeah, I can jump in, and after we give you a little context of what it is that we do, as well as the core event, we'll probably have Internet Paul share screen in a little while and take you on a real quick tour of the current state of the site on the platform. So really, Tokemak sort of grew out of opportunities that we saw in the trading and market making space. So we were partnering with a lot of different projects, helping them with market making, initially on centralized exchanges, but we quickly evolved into AMMs and other decentralized exchanges. And kind of what we observed was that all these different builders, their vision, if they chose to tokenize, their vision was living or dying based on whether they solved this very abstract concept of liquidity and market making. And it seemed very strange for someone who's building, like, for example, a gaming token or something, to have their vision succeed based on whether they figured out this abstract thing of market making and bids, offers, etc. The sort of analogy that we saw was it reminded us of the 90s, when late 90s, early 2000s, when tech companies out of necessity had to spin up massive server farms and hire armies of IT professionals just in order to basically host their site and deliver their product. Then you had AWS come along and say, hey, now we've got this in the cloud, we've got all this handled, just focus on building the product. So really what our core thesis is that as Web 2 is turning over to Web 3, the role of data flow is being replaced by value flow. So as tokens move around, this is really value flow. And that means that in this new era of the internet, liquidity is essentially the bandwidth. And so Tokemak is trying to usher in the broadband moment for liquidity, where there are extremely tight spreads and ideally no slippage on trades, so that users and protocols can interact in all kinds of crazy ways that are at the moment sort of hard to even imagine. But that's where we're sort of going with this and trying to establish deep liquidity and low inflation liquidity, which we might get to later on this call, potentially across DeFi. So I think maybe a couple more sort of details just on how all this works. We really have three different types of participants within our platform. So we have liquidity providers, liquidity directors, and pricers. And this was us imagining what a decentralized version of a market making or trading firm looked like. So if you think about what makes a market making firm work, they're really centralizing three different things. They're centralizing capital, they're centralizing sort of strategic market knowledge about what asset classes. So, for example, executives at a firm saying these are the asset classes that we will trade and what exchanges we will support. And then last, you have the actual trading technology and expertise, often called the market maker themselves. And rather than like siloing all those in one centralized house, we're disaggregating those three things across the blockchain, initially on Ethereum base layer, but we'll be quickly expanding to L2s as well as any relevant base layer chains as well. And the goal with this is to have capital efficiently match sort of strategic knowledge of where that liquidity is needed. And then ultimately the pricers who can set bids and offers into the market. So for example, if you have ABC token, or just to make something sort of tangible, let's use ALCX, which is one of the winning tokens in our core event, which we'll get to shortly. You can act as a liquidity provider on Tokemak by staking your ALCX into the platform. And now you're acting as a liquidity provider, but without the complexity that is required if you go directly to a Sushi Swap or Uniswap or Balancer, where you need to have not only the ALCX but also the other side, so the ETH or the stablecoin, to deposit. We now basically are offering single-sided pools where we're crowdsourcing each asset. We crowdsource in a separate pool the ETH, and then our manager contracts is pulling the ETH or the stable along with the project token, deploying those. And then we have advanced surplus deficit mechanics as well as a reserve system that make sure that the liquidity providers are not the one that are taking any IL risk. So to the user, it's sort of a no-brainer because not only can they just deposit and earn token yield on any assets they have without pairing, they also don't have to deal with the complexity of navigating a generally pretty complex system of for entry-level users of navigating into Sushi Swap or Uniswap as an LP. And then additionally, they're not taking any IL risk that's mitigated in other parts of the system. And ultimately, it's a different holder within our system, different type of user that's more advanced that takes any residual IL risk that's remaining. That's how the capital enters the system. The liquidity directors are how the capital flows in the system. So liquidity directors have our native token called Toka, which can be thought of as tokenized liquidity. They're basically staking into the system and then voting on what type of liquidity they want to see and where. So for example, they want to see SNX liquidity on Sushi Swap, or they want to see Fox liquidity on Sushi Swap or Uniswap. And they're basically voting a token. So we sort of have them structured as reactors. And you're voting the liquidity of that token reactor out to the different venues. And then it's a pro rata share of the votes. So you'll see percent breakdowns of how everyone's voting. And each liquidity cycle, the liquidity is deployed across DeFi to those venues. And at launch, we'll have Uniswap, Sushi Swap, 0x, and Balancer. And we, of course, want to expand to more venues. And ShapeShift is a natural one that we'll want to build into our roadmap at some point to expand and provide liquidity there. The last type of participants, and then I'll pause since this was a kind of a deep dive, are what we call the pricers. This is only relevant if you're on a venue that is either doing an RFQ or an order book model, as opposed to an AMM where it just trades on the curve. So at launch, for example, 0x is the only one that requires a pricer, and they basically set the bids and offers into the system or respond to RFQs. And that's also decentralized. So that's sort of that decentralized trader role, if you will, that enters into our platform.
Very cool. Thank you for that overview, Liquidity Wizard. The more I learn about Tokemak, it's a really fascinating concept. I like to think about it it took me a little while to understand that. I spent a few weeks trying to look into it. It was a little confused at first, but something really clicked when I started understanding the token and Tokemak as kind of like tokenized liquidity itself. Could you talk a little bit more about how that works, like when a project, like what's happening with the core reactors, sets up a reactor and how that like token swap works and how that benefits the protocol that is, doing the swap?
Yeah, absolutely. So as you correctly said, the best way to think about Toka, our native token, is really tokenized liquidity. And that is because sort of in perpetuity, whatever percent of the circulating Toka you have, or really staked Toka into the system, you are able to generate and direct that same percentage of the entire TVL in Tokemak as liquidity to wherever you need. So it's really like liquidity on demand. And coming back to what was just mentioned with Core here, this was an event we just ran. For any of you that didn't see what was happening, it stood for Collateralization of Reactors event. And it was basically an event where we determined the first 5 reactors that were going to be spinning up. So again, anytime I say reactor, just think of it as sort of the apparatus that we've designed, or sort of the visual that we've wrapped around for a liquidity deployer for a given project. So for example, there's the Ohm reactor that deploys Ohm liquidity for the Ohm token. The output from that event was that our first 5 reactors will be Ohm, ALCX, FXS, TCR Tracer, and Sushi. And effectively what's happened is that served as our governance vote. So that was our Toka holders in the community were voting for which reactors they want. Those got the highest vote. And the next step right now that we're doing is going to those DAOs, and we're doing a DAO to DAO swap of Toka in exchange for their native token. So I'll just use Sushi as an example here. So Toka and Sushi are being swapped a certain quantity, basically dollar quantity of both the tokens, because what Tokemak needs to stand up, actually Sushi is confusing because there's Sushi Swap and there's the Sushi token. I'm going to use Ohm as an example here. So what Tokemak needs to establish the Ohm reactor is a certain reserve of Ohm, and what Olympus DAO wants in order to sort of unlock what we call generalized liquidity, which is liquidity that can flow to any of our supported venues within the Tokemak ecosystem, is they need a certain amount of Toka to be a powerful liquidity director and direct that flow, like direct the nozzle, so to speak, of Ohm liquidity across the supported exchanges and venues. And so we do this swap basically in this first tranche. We're going to be adding a lot more. These first 5 are just sort of the first foot in the door. We want to go to support basically all tokens eventually. But these first tokens, then we will be swapping with them. So the DAO will get enough Toka to be able to direct that liquidity using the Toka tokenized liquidity. And Tokemak will have enough of the native asset or the project token, in this case, Ohm for the example I'm talking about, so that we have it in our reserve basically as this backstop that protects with a bunch of stuff that we probably don't have time to get in a lot of details today, but with a Git book that's launching tomorrow, if you're curious for some of these details, it will basically protect the liquidity providers from IL, and rather it goes over to liquidity directors actually serve as the final backstop by some interesting mechanics that plug into that reserve. So that's sort of the sort of how we're working. This is really users benefit from this because, of course, users want to be able to control and provide liquidity. If you think about user as a liquidity provider, you can now earn yield on your assets by single asset staking, but rather than putting those into a money market where someone could borrow your tokens and sell them and short them, you're instead supporting the liquidity of the projects that you already have an investment in. You still have your tokens one to one, and you're earning Toka. Users and DAOs are benefit from being a liquidity director, staking the Toka into the system and directing that liquidity around. And we're starting to get sort of these DAOs as power users, starting with this first tranche of the core event.
Also, I'm ready to share. We troubleshooted the tech, so if you want to look at core now, I think might be a good time.
Yeah, good for mine. Is that okay on the ShapeShift side? Cool.
Yeah, of course. Go ahead and anyone that wants to follow along and see what they're talking about, join the screen share Zoom link that was shared in stage chat. And Paul is starting that screen share now.
Yeah, so this is our current iteration of the site. It's pretty simple right now. We're not yet live with token reactors. In the next few weeks, now that core has been completed, we will start to take deposits of the assets of the DAOs that won core, which were Frax, Alchemix, Tracer, Olympus, and Sushi. So those tokens will, over the next few weeks, become qualified for deposits into the left side of the reactor. The basics of the site, because we definitely have 2 very distinct and important user types, the liquidity directors on the right or the Toka side of the reactor, and the liquidity providers on the left or the asset side of the token reactor. The site is effectively cut in half vertically with the Tokemak in the middle. We did think it was important to sort of give a visual and sort of narrative to what's happening for people who aren't as interested or knowledgeable when it comes to finance. And market making is one of the more abstract concepts in all finance anyways. So the game for what will become the token reactors, it's a pretty similar tile layout to the core governance tiles, with the Tokemak in the middle. There will be a deposit interactive modal or button here, and a similar interactive piece for the Toka side. The game is pretty simple. It's just balance the reactors. And by doing that, you are sort of providing optimal liquidity and giving us the market intelligence on where to send that liquidity in the most efficient way possible if the reactor is fully balanced. The rewards will also incentivize not only the deposit of both Toke or I guess the allocation of Toke and the deposit of the other assets, but it will incentivize people to fully balance and optimize our protocol's ability to distribute that liquidity. And Carson, jump in if I'm messing anything up. Yeah.
No, this is all good. And just to kind of highlight and why on this page right now you can't see this. At the moment, we haven't started the liquidity provider, so the left side of the reactor deposits yet. But those are going to be going live over the next several days for these first 5 reactors as we're finalizing things with their DAOs. And so effectively what that does is you'll see a fill on the left side of these reactors here. And then the game that Paul was mentioning where it's balanced the reactor, you'll see the fill lines. And basically, as an example, if the TCR reactor has 30% of the toka staked to it at the moment, meaning 30% of the toka stakers are voting and directing the TCR liquidity to the various exchanges, then the system is most efficient if it's paying out. Yeah, here, this is what it will look like. The system is most efficient when 30% of the TVL in our system is also in TCR. And anytime those are out of balance, you'll be able to see it with a quick glance of the eye here, which ones are sort of over or underweight here. And then the game is, and that also impacts, importantly, the rewards. So the token that's paid out to the liquidity providers and the liquidity directors is dynamic and is looking at this efficiency. And the system only emits the most tokens. So there's a certain quantity budgeted each, what we call liquidity cycle, which is basically each week. But it only pays out the max if the system's operating at peak efficiency. And so the sort of economic argument for that is when the system is providing the most utility, it's emitting the most rewards or the most tokens to users. When it's out of balance and operating at sub-peak efficiency, then it's handing out sub-max rewards. Let's see. I think if you go back once more to the live site, Paul, or actually anything you want to say on there, Paul, sorry to make you move.
No, I think one of the, I guess, more like direct mechanics that you can see is that the APY on the side that has sort of less USD notional deposits or allocation on the toke side is going to be higher to incentivize people. Essentially, what's happening in this current state of the system is that we have quite a lot of deposits, but we don't have enough people to both collateralize those deposits and sort of give us the market intelligence on where should this liquidity go. There will be future versions of the site. This is sort of the simple stake or the simple game. There will be a pro, essentially, mode for people who are potentially like professional market makers or DAO operators or exchange operators who are going to have a much more higher vested interest in where the liquidity goes and sort of what the current outlay of the markets is for those tokens on those venues. So there will be like a very information rich, sort of more like the difference between Coinbase and Coinbase Pro. There will be a pro version that is giving you a ton of data to help you make the decision on where should you direct this liquidity for the token side of things.
So speaking of Coinbase versus Coinbase Pro, this is all super great. I love that we're diving deep, and I think a lot of the people who are interested in tokenomics are understanding a lot of this. But we had a question from a community member who's not as experienced with tokenomics, but still wants to understand and learn. Curious which one of you guys can we pause and just who can give the best ELI 5 explanation of what Tokemak is for people who aren't tokenomics experts?
That's a good question. I'll take a stab at it, and then this might be one that's better comes from one of the other members of the team, since I usually go on to too long of a solution. So I would say this, within DeFi and like the metaverse and everything that's happening sort of built on top of blockchain right now, you have all of these. In the past, data was moving around, and now you have tokens that need to interact with other tokens. And this is not just users getting in and out of protocols, but protocols interacting with other protocols that use other tokens. So in that world, you need sort of a way to just map between these things and switch back and forth, much like in sort of traditional internet architecture. You use different forms of data for whatever is best for the given job, right? Here you use the whatever token you need to get something done. So you can really think of Tokemak as just middleware to power that whole thing. It's really an engine, a liquidity engine for DeFi might be the best way to summarize. And this is sort of a good page that Paul's bringing up here, which is we really see this thing as infrastructure or a utility or middleware, whatever you want to call it, where it is an infrastructure layer. So if you have no liquidity in DeFi, the whole thing is down, right? So much like on this call, if I all of a sudden lose network access or lose power in my laptop, I'm going to drop from the call. Well, there's more things built up that are required for DeFi to function. So this is kind of the stack as we see it. Is, early on electrical grids were made to move around electricity. Then a lot of advancements later in telecom, you had the internet to move around data. Multiple blockchains came out, including Ethereum, to move around value, and then Tokemak is really there to move liquidity on top of Ethereum. And much like what I was just saying with dropping from this call, if any of those four things were to go down, including liquidity, apps like SushiSwap or Uniswap would not function. Like, they'd be completely useless. And so that's why we think of these things as infrastructure.
Yeah, I can chime in here. So I also, not exactly a tokenomics guy, doesn't get me up in the morning, but I am interested in technology, and I think this is relatively simple. So if you think of value as data, and really value is at this point just a special type of data that is sort of more prone for dishonest behavior and more important to keep from being replicated, which is sort of the fundamental innovation of blockchain itself. Everyone keeps asking, like, where is the killer app, right? And we see, because value is sort of the equivalent of data in financialized computer systems, you can't really have a killer app until you have that broadband moment. And in our minds, the broadband moment is sort of this slippage-free or nearly slippage-free high-speed value flow. And that's why we're so, we always hit that term value flow, with making the analogy to data flow. When the internet became interesting for everyone outside of like hobbyists was when broadband came out. That's when all of the interesting applications started to hit. So we sort of see a similar thing taking place once the liquidity is sufficient to allow for value to really flow freely. That's when you're going to start to get some really weird applications and weird user behaviors. Like, what do you do with value if it can losslessly transmit between all these different assets? I'm not sure, but it's definitely going to be interesting. So one of the, that's sort of Tokemak's like high level mission, is to make liquidity so rich or so deep that you can sort of move value around as freely as you currently send around any other type of data.
I love that. I think that's really, really helps to just grok Tokemak. Is it fair to say too that this falls into the category of liquidity mining 2.0?
Yeah, absolutely.
Funny you should say that.
Yeah, right here. Paul, you jump in with any thoughts on this too?
Yeah. So okay, go ahead. Yeah.
Oh no, okay. I was just gonna say, like, the sort of like high level here, and then Paul, you can chime in too. Is if you're on a planet, like we saw this analogy essentially with mining here. So if you're on a planet and you have, regardless of your reserves, you have some scarce resource like oil and gas. You might have 50 years worth, you might have 50,000 years worth, but effectively that's going to be unsustainable in the long term. So the kind of analogy here was to move from inflationary energy like oil and gas here over to this tokamak, this fusion reactor. And we saw the exact same thing kind of that's playing out, what I just described in the energy space, over here within DeFi liquidity, which was in 2020 and in DeFi summer. Everything took off because there was crazy amounts of inflation being paid out. It was the right move. It's what got capital and got users into DeFi. But that's by definition unsustainable in the long term, and we need to sort of move over to this reliable, sustainable, on-demand form of liquidity that Tokemak will provide. Paul, you want to layer on anything there?
Yeah. So this like metaphor still gives me goosebumps every time I look at it. It's crazy how much the language just like sort of serendipitously happened to line up. We literally call it in liquidity mining. We literally call the tokens that are produced through that behavior emissions. To some extent, liquidity mining is polluting DeFi with inflation. So this whole thing, like, it's crazy how much it lines up. And we actually came up with this after we had already decided to brand Tokemak after this fusion reactor concept. So it's crazy how much it lines up. I do think it's true, and effectively Tokemak will provide a huge amount of liquidity similar to liquidity mining, but it is a better form of liquidity. It's more reliable and results in less emissions, and it will make existing token stockpiles more valuable due to the lack of emissions, or at least the reduction in emissions.
Super cool. And would you guys say it's part of Tokemak's vision to even potentially like replace liquidity mining eventually?
Yeah, it's one of the things. One of the things, and trust me, this will be a good thing, even though the degen in me might be like, oh crap, what I'm about to say. But the goal of this is to move beyond incentivized pool twos. So right now, if you look at most DAOs, right, they're incentivizing a pool one and a pool two. So pool one, a lot of them are just doing that to remove sell pressure. If you actually think the mechanics, the more innovative ones are using that for governance votes or collateral and things. So stake in this pool with your ABC token, and then once you're staked, you can do something with it. And then they're incentivizing a second bucket of inflation or emissions, whatever you want to call it, to a pool two. So an ABC ETH sushi pool or uni pool or balancer pool. And effectively, what we're trying to do here through Tokemak, you don't have to incentivize two pieces of the pie to two different pools. You can actually accomplish the same thing with a single pool. So this might be hard, and if I lose you here, I'll only spend about 30 seconds on it. The goal is to have incentivize a T asset staking pool. So in that scenario I was just talking about, a T ABC pool. I didn't talk about this, but when an LP puts an ABC token into, or say, an OM token into Tokemak, they get back a T version, much like on Aave, where you get back A tokens. So if you put in ABC, you get back TABC. The ABC DAO can then go and incentivize a TABC staking pool, which means with a single pool and a single bucket of inflation, they can merge pool one and pool two into a single one. They can earn token from it, and they can still solve their liquidity, and not just off of a single pool like they were choosing in the past when they were just finger in the air choosing ABC ETH sushi or ABC USDC Uniswap, but rather generalized liquidity where, based on the token holders, they're routing that to wherever it's needed across all of DeFi based on where other users and protocols need to access it.
That's awesome. So in the case of ShapeShift, if ShapeShift were to proceed with a token reactor, basically anyone with Fox would be able to deposit Fox and get TFox. Mm-hmm. TFox could be redeemed one for Fox, but as long as they're holding TFox, they're earning yield, and they're earning that yield in tokens, right?
Yep, correct. You got it exactly right.
So they're earning tokens, and then once you have tokens, which the DAO would also have tokens in this situation, mm-hmm. because we do a token swap, then the DAO would be able to direct that Fox liquidity to wherever the DAO felt it was most beneficial, which I also think is really cool, because right now it is, especially like with Uniswap v3, Uniswap v3 is great for capital efficiency, but it's not always great for just the average token holder who just wants to get yield on their tokens, who then has to manage their strategy to get the optimal yield. So this is pretty cool, because it enables, DAOs, or the people who are really interested in tokenomics, to, to collaborate and coordinate what they think is the best strategy for building out liquidity. And token holders can just deposit Fox, get yield, and not have to worry about impermanent loss.
Yep. Yeah, very well said.
I have a question about that, and it's come up in the community in the stage chat too. Can you guys go a little more? I know you mentioned earlier about how when you're doing this single-sided staking, which is super cool, that there is no impermanent loss risk for that person in Willie's example who's just putting up Fox. How does that work? How are they protected against the impermanent loss?
Yep. So effectively, this is where the reserve comes in. So imagine that there are 100 Fox LP into Tokemak. We only deploy initially. When we have sort of the training wheels on, we are flowing out 6-to-1 value in LP versus what we have in reserve. So if we have for every one Fox that we have in reserve, and I'll say more about this in a second, we're flowing out 6 Fox worth of liquidity. Now, of course, half of that is actually in Fox. The other half is in ETH or a stable that's paired with it. What happens is once it's deployed and Fox rips up, because from the Fox perspective, we do everything in quantity space, because you can think of LPs as like a liability on our system. So if there's 100 Fox depositors and 100 TFox outstanding, we owe people 100 Fox. So as the price goes up, which means the LP pools that we deploy are selling Fox, right? It's going underwater in quantity space. Now, the way we manage this is we have this sideline reserve. So we're showing users at all times on the platform, they'll see the health of the reactor, which is what is each of your 1 TFox backed by. and it'll say right on there that 1 TFOX is backed by, and this is just could be a stated system, 1.3 Fox plus 15 Toka. And it's backed by Toka as well, because going back to what Paul had showed earlier in this call, where there was the two sides of the reactors, you have the liquidity providers and the liquidity directors. The liquidity directors, not only they're earning and they are voting where the liquidity goes, but because they're earning, they're the ones that are taking the final IL risk. So essentially, if the IL went so hard against Fox that you needed to sort of bail it out, it would come from basically claiming, like pulling some of those Toka holders. So really the only one left holding the IL risk is Toka holders who have staked to, and we don't globalize any losses. So it's Toka holders that have staked to a specific reactor, and we're getting the benefit of earning Toka and directing that liquidity somewhere. And those are generally more sort of advanced users that have are bought into that project as well. And the other thing I should say is it's actually not nearly as, like, that whole process works very well, but there's another overlay to that makes it work way, way better, which is you can kind of think of that whole process wrapped up in an Aave or Compound like overlay. So if you think about Aave or Compound, they are always at risk of a bank run. So as soon as they are taking deposits, right, they are lending out a good portion of that. That's the whole business model, right? Lend at a higher rate than what you take in. That means if everyone were to withdraw instantaneously and didn't care that they are getting a high interest rate, they would not have enough tokens to hand back. That's where you get into the staked Aave, et cetera. We have the benefit of that on top of everything that I just talked about. So even though all those things apply, there is no such thing as a run on this until enough people decide to withdraw, and we're in general way healthier than those platforms are, just in terms of a amount out the door. So for example, if a token doubles in price, and I don't think we have Bruno on this call, but he'd keep me honest on this. The token doubles in price, I think you're underwater around 30%, 25 or 30% in terms of quantity. Let's just say it's 30%. That would mean you would need more than 70% of the depositors, of the Fox depositors, if we're talking about the Fox reactor, to withdraw before you ever start eating into the need to dig into our reserves or into the Toka holders that are staking. And my guess is I lost probably 8 out of 10 people on this call during that, and that's totally fine. I wouldn't have been able to follow that. I'm very visual instead of audio, but we will have a Gitbooks that is going live, I think tomorrow, that's going to address quite a bit of this, and then we'll be adding more and more of that over time so that people can understand the mechanics and read through things.
Super cool. And so to sum it up, there's in the event that there was impermanent loss, basically there's kind of a backstop. There's this collateral, and then there's also the toke holders, basically. And so, yep. And the stake toke, and that is what basically prevents impermanent loss for an investor. Awesome.
Yep, you got it.
Thanks for walking us through that. Super cool, and really, really incredible how you guys have come up with this design. Can you talk about a little bit of like how the process was for figuring out how to implement this? And
yeah, I'll give a little bit of context on the roadmap. So the kind of genesis for all of this was back kind of March, April 2020, when as DeFi started taking off and got really excited from a lot of what we were just talking about, liquidity mining and yield farming. We sort of scratched our heads. We watched everything develop. I knew that the space was going to get to where we were, but it all happened in like 3 months, and I thought it would take like 3 years for how much things evolved. So we started. We all believed in DeFi on the team, but at the moment we were market making, and we were market making as a centralized entity. This was the firm that was on the trading side called Fractal. We were trying to figure out, okay, what is it? Right now we're supporting DeFi, but we're not decentralized ourselves. So we started becoming obsessed with like, what does it look like if we drink the Kool-Aid, so to speak, and were to decentralize a market maker? And so that was when the genesis of the idea happened. It then took kind of like 4 months of just really high level kicking around these things. I would say the first few weeks we got pretty far. I had one day where I just like stared at a wall. This sounds funny, but literally just stared at a wall for like 3 hours and probably got 80% of kind of the top-down architecture of this. And then from that point on, it's just a ton of going through everything and hitting a wall here and then making modifications. And so it was really kind of summer, fall, the high-level architecture going into spring, starting to go into how we would actually put this into smart contracts, et cetera. And then getting into the summer, we had the launch with the token and then the core event, and that's sort of been the process. And to give you an idea of what's kind of coming up next, we're going to be turning on the LP, so the liquidity provider deposits for those initial reactors over the next week and a half for those first 5 projects. Then we're going to be actually having a Core 2 event where we will have projects again that get to vote. And one of the exciting things I wanted to say here is for Core 2, we're going to add Fox as one of the eligible tokens there to vote on. So more details coming on the actual time for that, but Fox will be included in Core 2, which will be coming in several weeks here. So be ready to vote with any token you have for Fox then. And then following that, we'll be turning on Liquidity Directors, so the token staking for those tokens, and then starting to flow these things out into the exchanges and actually providing liquidity across DeFi, and then just adding more and more token reactors as we go.
That's awesome. Thank you for saying that. And yeah, really, really excited for Fox to be in ShapeShift to be part of the next core event. And I guess for everyone else, and maybe you all can give advice, what's the best way for us to get involved or to give us the best chances of getting a token reactor? Is that mostly just to get some token, vote on it when that happens?
Yeah, it's definitely the best. Is you want to be staked in the system. So the way it worked on the last one was you get different vote weights based on what pools you go into. So if you're in the Toka pool, actually, Paul, I don't know if you still have access or if you're still in that screen share. If you're not, don't worry about it. But if you are, if you can share your screen once more.
No, I am.
And just go to, oh, you already are? Okay, cool. Go back to the, just to our main live site right now. I want to quick show them something.
Yeah, okay.
We've got 1 minute before the Zoom's going to kick us out too.
Oh,
I don't know
okay.
what happened.
Well,
I guess my Pro Zoom just expired.
All right, just go to the top. I'll be real quick with this. Go up to the top, Paul, way up to the top. There we go. Okay, so this just shows the 3 pools that will be eligible for votes are the ones that say Toka Sushi LP, and Toka Uni LP. There was a higher vote weight if you did an LP because, of course, you were taking, 1, you had to put the ETH with it, and 2, you were taking the IL risk. So as long as you're staked in any of those pools, you'll get votes then. And then down below in Core 2, you'll go to vote for any reactors you want, including Fox. And there'll be a lot of announcements if you watch our Discord, et cetera. Discord and Twitter will be letting you know when Core 2 is coming. And some interesting ways where we could consider exploring some perks and things in order to get more people to vote towards Fox. So we can discuss that later as well.
Awesome.
Yeah, the competition is pretty fierce right now to get a token reactor. So yeah, definitely interested in anything we could do to help improve our odds, including, I know something that you guys had mentioned would be helpful too, is just engaging with the Tokemak community as much as we can proactively.
Yep.
And I know we've already posted a few things in there to let them know that we're definitely interested.
Yeah, and one thing, and I'm glad. So we still have a few more minutes. It was just the Zoom that was ending, right? I was thinking maybe we had the whole thing.
We got another,
okay, great.
another 17 plus minutes here.
Okay, perfect. So what I was going to say was, what I was meaning by some perks, since we have a little more time, and I was thinking the whole thing might end in a second. I'm sure that they won't mind. I think they had tweeted this, so this is public domain by now. So Scoopy on the Alchemics team basically announced on Twitter that they're going to be giving an NFT, for example, to anyone in the community that voted for ALCX. And all of the votes, by the way, we need to go into this in too much detail, but we designed the voting system from scratch, so we're not using like Snapshot or anything like that. The votes are actually captured on Polygon network. We're basically using that blockchain as a database, and it's just signatures from users. So once you're staked into our system, it's gasless voting. You can move around. If you have 100, if you have 10 toka or 100 toka staked into the system, you can allocate your votes however you want. So you could do 80% of them, like 80 toka, over to the Fox reactor, and you could do 20 to ILV or something like that. It's very advanced compared to most governance approaches that are out there right now. And I think anything where you can sort of go beyond, like obviously you have the strong core ShapeShift and Fox community, but you can get clever, I think, with some of these ideas of ways to sort of carrots to put out there for other people that maybe are looking at the page and don't know how to vote to want to go Fox. And I know that worked very well for the ALCX crew. And then, of course, anyone can see the data on who actually voted there. And so they're going to be doing an NFT drop in the near future for those voters.
Yeah, that's a great idea. Maybe in our we actually have a tokenomics meeting later today. Maybe we should brainstorm some other ideas of how we can get those toke votes when it's time.
Yeah, absolutely. You can get creative.
Yeah, really cool. Well, I want to make sure we got 15 minutes left here that we give some time for audience members to jump up and ask a question or two. So I see we have one hand raised from one member. I'm going to invite him up to speak. If anyone else has a question, please feel free to raise your hand at this point, or just type it in stage chat and we can ask it for you. Hudis, you've been raising your hand for a bit. You have a question?
Hey guys, thank you for this presentation and for everything you're doing. Really excited for what we have to come. I just wanted to ask about your take on the market share and I guess, how you guys compare to what, without naming names, right? Other participants are doing on liquidity infrastructure. Yep.
Sure. In terms of, and just make sure I understand the question right, market share in terms of kind of what other groups are sort of in this space and also trying to kind of provide liquidity.
Yeah, exactly.
Yep. Yeah, great question. So I think it's interesting because we kind of think of this as a new class of DeFi primitive, where it is up at this like meta liquidity layer, right? So no trades actually, like when a taker comes or a trader comes, they don't interact directly they interact directly with our liquidity, but it's always through another platform, right? So right now it'd go through SushiSwap or it'd go through Uniswap, and then our contracts are flowing liquidity into those venues where then traders interact with the liquidity. You can kind of think of it as it's like this isn't a perfect analogy, but it's kind of like a 1 inch in reverse, right? They're aggregating things for traders or takers to hit aggregated liquidity. We're up like this aggregated sort of market maker that's pushing liquidity down into the exchanges. So we're kind of on the other end of that. So there's sort of there isn't things out there that are like approaching that quite from this. Now that said, there's other liquidity providers to your point. So the other liquidity providers that are sort of your in quotes competition here, right, would be individuals, which of course can continue to kind of go directly those more advanced users that can navigate the complexity of being an LP, or as was brought up earlier on this call, going to Uniswap v3 where it's even more complex. And there'll still be those kind of power users. You're also sort of in, again, quote unquote, competition with, VCs and market making firms and trading firms that go directly as LPs. But we really don't think of any of these things as sort of competition. We think of this as basically blue sky market, because all of those will actually be able to do their position much more efficiently using Tokemak. Tokemak's just another tool at all of these groups' disposal. We really don't think that we're going to war with anyone. We're really just building this infrastructure that's going to benefit all. And you can think about sort of the Venn diagram overlap of the type of users that will want to plug in as a liquidity provider versus a liquidity director versus a pricer. And a lot of groups, as you think about all the different types between users, traders, investors, market making firms, individuals, protocols, DAOs, all of them, almost all of them will want to plug in at least one of those three positions, and many will want to plug in at least as two or more of those positions.
Yeah, that makes sense. Thank you so much. Again, very excited for what we have to come.
Yeah, good question.
Thanks, Hudis guy. We got another question from community member King Lizard. He asks, in a cross-chain world with siloed liquidity, has Tokemak given any thought to how to best utilize liquidity between L2s and other layer ones?
Yeah, answer is a lot of thought, and that's probably the biggest growth vector. There's actually a bunch of different dimensions or different vectors of growth for Tokemak, and we didn't even get to the concept of the singularity and on this call, and we probably don't have time, but there's some really cool things that's coming eventually with Tokemak. But cross-chain is one of the most interesting things for a lot of reasons, but sort of you kind of hit the nail right on the head with saying that there's ultimately going to be huge fragmentation or segmentation of liquidity from this now clear trend that we have towards multiple L2s as well as some other dominant L1s. And the goal with Tokemak is to be agnostic to all of this, meaning we want to support all of them that are relevant. So we want to become an any-to-any protocol. Now, we won't be day one. At first, we're Ethereum base layer. Some of the voting is happening up on Polygon, I mentioned, but we quickly want to expand to these. So we're going to be expanding the team. We're going to be kind of forking out the roadmap in order to start building connections into these things. And when I say we're an any-to-any protocol, I mean we want users to be able to deposit tokens into our platform wherever they're holding the tokens, so on any chain or any L2. And then we want the liquidity directors, the token holders, to be able to vote that liquidity or direct that liquidity to any supported exchange or venue on any L1 or L2. And I think, by the way, that's going to be very much help the efficiency of the space, because at first the liquidity inefficiency and fragmentation is and will continue to be a huge problem until you have this thing that can sort of efficiently flow it to wherever is needed by wherever it's needed to be used by participants, whether they're users or protocols.
That's awesome, and aligns well with how we see this multi-chain future evolving as well. And on that note, this reminds me of another question that popped up earlier in the chat from Ron, and his question was, is this available for just retail investors that aren't super savvy? And I think we kind of addressed that by answering that for an investor, you really can just stake a single token and get yield. And so I think it's worth noting too for the community that right now we're mainly focused on talking with Tokemak about setting up a Fox token reactor, but also a big part of our roadmap is giving ShapeShift users the ability to access all these interesting DeFi protocols, and especially the ones where it involves earning yield, doing that natively in our UI. So I think Tokemak, especially if they continue to see the strong success that they've already had this early on, I think there's a strong likelihood that we'd want to see a Tokemak integration in the ShapeShift interface, so that users could basically just see all these opportunities to earn yield on any of the assets that Tokemak supports, just in line with like all of the opportunities that we'll see soon with the Yearn integration. Yeah, great idea. I think there's a lot of different ways that we can integrate and flow things kind of both directions, probably from Tokemak to ShapeShift. So somewhere can come, from ShapeShift as a platform over to earn in Tokemak, and then vice versa. Eventually, it'll make sense to integrate so that we can flow liquidity from Tokemak into ShapeShift as well, as we start expanding to new venues once we get through launch. So excited about that. And to the question about can retail participate? 100%. We've sort of from the very beginning been. We know that we're sort of overrun by DAOs and institutions and individuals that are interested in this, but this has been built sort of from the ground to make sure that this was not excluding individuals. The heart and soul of DeFi thus far has been the so-called shrimps, and I don't mean that in a demeaning way. I love the shrimps in the space. And that's really the heart and soul of this. So we want to make sure that if you have one Toka or you have one Fox, you can still access and get play by the exact same rules and access the same benefits as someone that has $50 million of either.
I was going to describe the IL protections as comfy.
Comfy, yes, absolutely. We want it to be comfy when you're being an LP. We think that this will make basically be an absolute no-brainer when you have tokens, for whether it's Fox or ALCX or whatever that are supported by Tokemak. It should be a no-brainer to put your tokens in there because you're earning, you have no IL, and you can redeem it 1-for-1 at any point. So we want it to be comfy. Meanwhile, you're supporting that project by increasing the liquidity, since then Tokemak is deploying that into the markets, which is increasing the bandwidth of that token for users and protocols that need to interact with that product, with that protocol.
And one other thing, just to double down on, you've said this before, but the main use case for borrowing and lending is to go short. So your alternative yield sources are potentially, not always, but potentially contributing to people being able to short the project.
Yep, absolutely. And the compare contrast, just to what Paul was saying, for any of you that don't think in these terms as much, is if you're lending through a lending protocol, and this is not trying to thumb the nose at the lending protocols, they serve a very important purpose, and it's not just for shorting, but the borrowers are either the only reason to borrow something from you through a lending protocol is to go after a yield that you should have found yourself that's higher than what the borrower is borrowing at, or to short the token. Those are pretty much the use cases. Here with Tokemak, no one's borrowing your token to go short it. Instead, it's flowing into the market so that people can buy and sell into it, which is, again, supporting this concept of value flow bandwidth, which is liquidity.
Super cool. We've got time for a couple more questions if anyone's got them. I got one. John, did you have?
No, go ahead, Willie.
Cool. Yeah, I'm just curious. So you guys we're about to see kind of the first experiment with toke holders actually directing the liquidity. I'm curious, what do you guys expect to see? Where do you expect to see a lot of the liquidity get directed to?
Very good question. I can answer in a couple dimensions, but I'll see if there's I'll just answer in both dimensions, because the two different dimensions, right, are which token projects do we get a lot of activity, and then which venues do we think it'll be routed to. I'll do the venue first, because I think that's I probably have slightly higher conviction in that. So at launch we have SushiSwap, Uniswap, Balancer, and 0x. And I think this is an interesting protocol because it's agnostic to size, right? This can flow, the TVL can flow to any of these things just based on where votes go. So if you think about this can lead to sort of a liquidity arms race between these venues, because if they start stockpiling Toka, they can start voting. Like, not only can the token projects, hoard Toka to be able to direct more of their own liquidity and incentivize more of the liquidity, because the more Toka they stake to their reactor, basically the more TVL they can attract in their native token, and the higher the rewards they can make for that token. But similarly, SushiSwap can do a straight ticket vote across all the reactors for those tokens to be directed to SushiSwap, and similarly for Uniswap, and so on. My thought is, separate from those mechanics, which I think will take a while to play out, and ultimately the free market will tell how all of that thing works out. But my current thought is that there'll be a lot of liquidity directed to Uniswap and SushiSwap. There's really interesting things we can do with Balancer and 0x, but I think just because they're not quite as much of the household names, at first they might not be as much. And I think over time, there will be a lot more that will be routed to those and some of the smaller ones as we add more. Because ultimately, what this thing can do is it can, the market will determine where the liquidity goes. And so the venues that provide the best user experience, the best user interface, the best fees and slippage, we'll basically be helping them provide the best slippage, but the best fees, those will be the ones where more liquidity is routed to. So that's my kind of prediction on where it will go. In terms of what will be directed, I think at first with those 5 reactors, I think it'll be a pretty good mix, honestly, because people will stake the Toka. Again, this is kind of that game of balance of the reactors. I think that Ohm will be an active one, because our community is very, very full of Ohmies. We love the Olympus crew. I think there'll be a lot of activity with the Ohm reactor as well as the ALCX reactor. Tracer is a very interesting one to launch because they're so early in their liquidity journey. That was kind of a dark horse one that I think no one thought was going to end up in the top 5, and they had a really impressive showing. But I think there'll be a lot of activity with the ALCX and Ohm reactors. Sushi probably as well.
Super cool. Thanks for sharing your predictions.
I've got a couple of ways that we can think about how Toka is voted to as it directs liquidity. The Toka holders will probably have a variety of different incentives and how they vote. I think we can boil it down into 3 different kind of drivers for where they might actually place their votes. One is if you put yourself in the feet of the DAO or the project that they are voting to, they want to just support the best liquidity that they can. And there are a variety of reasons that they might direct from one venue to another. And that may be independent from another type of Toka staker or Toka voter, which might be interested in voting directly for how it can help the protocol Tokemak itself in earning fees and continuing to build protocol controlled assets. And that's related to how it might vote for a specific project, but it's also kind of this meta Tokemak protocol layer voting. And then a third way that Toka voters might go is just purely voting for APR. And then they might actually be carrying more risk, but if you kind of you imagine this simple view that Paul had shown earlier, there will be a different APR for each reactor, and that actually wasn't shown in the Figma, as our incentive mechanisms kind of balance out to a healthy equilibrium. And if a voter just wants to find their highest APR, you might find them voting to a reactor that they don't actually know anything about, for a project they don't know much about, and for fees that Tokemak might earn, but they're after kind of the initial and immediate Toka rewards. I don't know where that all plays out, but I think there's kind of a few different models for trying to figure out how to develop some expectations about where these votes might actually send liquidity.
Yeah, super exciting, and will be very interesting to watch. We'll definitely be watching closely with this first round. Awesome. Well, we are right at the top of the hour. Thank you guys again for joining us and walking us through Tokemak. I've seen in the stage chat a lot of people who were really excited to learn about it and understand it, and definitely see the strong alignment of values. So really appreciate you guys taking the time to walk us through your awesome project.
Yeah, thank you so much for the invite. Glad we could do this. Appreciate it.
Yeah, thanks again, team. Yeah, great chat. This was a really great call. I think everyone learned a lot, and we're really excited to keep the conversation moving over the next few weeks as we see those first reactors launch, and we look at Core 2 and hopefully see if we can get a Fox token reactor as well. So thanks for all you're doing, and talk more soon.
Great.
Thanks guys.
Bye.
Thanks, everyone.
Thanks, Al.
See ya.